We get a big warning from Robert Kiyosaki telling us to buy gold and silver. But the big news of this week will be Jerome Powell in the Federal Reserve, and it is game over time for the Fed. Silver and gold know something very interesting, and this will paint the picture as we head into 2025 for what I believe, and hopefully you believe, and hopefully we see together much higher prices for the precious metals and much higher prices for the precious metal mining stocks. But let's get an update on what's happening this beautiful Monday morning, besides all of us being together here in the basement. Hey, I really appreciate you being here. Quick commercial for you. Thank you. Please subscribe to the channel. We want you to come back, be part of our group. You're welcome here. Thumbs up, the likes, whatever it is, help get the news out to more people. And super chat, super thanks are always super appreciated. Let's do an update. I think this is not an updated price. You're seeing channel sponsor Pimbex. I'm going to press the little golden triangle here to get an update. And okay, so we're up on silver this morning. Awesome. $30.60. Gold up $4.93. Guys, please support channel sponsor Pimbex. They're an online bullion dealer. What they will do for you, right, is deliver to your door gold, silver, or platinum group metals. But what's even more important about Pimbex is you've got a great selection of products to choose from. But what's even more important is their pricing, and you can discover this for yourself. Compare their prices to the other big online bullion dealers, and what you'll find is you will get more metal for your money at Pimbex. But let's talk about now what is happening in the silver market. So silver, here's the deal. Here's what's going on with silver. Silver is consolidating right now. Silver is building a base. Do you believe that we will see $35, $40 silver in 2025? I'm of that belief. And what's happening right now is a consolidation. A floor is being put in. Remember just not too long ago, guys, 6 months, 8 months ago, we talked about a floor being put in at $26 per ounce for silver. Then we moved much higher. We got up to $35. Now we've pulled back. We're around this $31 per ounce range. That is normal. Nobody's perfect, including the silver price, including you and me, right? Silver is going to go up, pull back, and what we're doing right now is building this strong foundation. All the weak hands are selling out, okay? Now, there's something else even more exciting when we focus in on silver. Do you know what that is? It's that darn gold to silver ratio, right? The number of ounces of silver that it takes to buy 1 ounce of gold. And that, again, has been stretched. Here, you know what? Let's go on a little field trip. You can watch me struggle. Let's go back to Pimbex and let's just quickly calculate where the gold to silver index is sitting right now. And if we take the gold price, 26.55, and divide that by $30.58. That's just unbelievable. Guys, look at this. Here's proof. Equals. There it is in bright green. 86. Okay. 86 ounces of silver. Here, I happen to have a tube of American Silver Eagles. There's 20 in here. Are you going to trade 4 of these plus probably another at least 6 coins to get 1 ounce of gold? The point is this, right? While silver has pulled back more so than gold and is consolidating right now, building this great base, at the same time, we have the gold to silver ratio, which is at historical high levels. It always compresses. There's a great book called Reminiscences of Stock Operators. I've got it here somewhere. I was going to pull it out and show it to you. Nonetheless, it's the Bible of trading, of markets. It was written like 100 years ago. He says in that book, he says, history always rhymes, always generally repeats itself, but nowhere else is that as common as in the financial market. So the reason why I told you that story is because as we can look at this gold to silver ratio being at this unbelievable, who in their right mind is going to trade 86 ounces, 90 ounces of silver for an ounce of gold? That ratio will come back. I heard somebody the other day talk about the mean, the average. I'm not a statistician, but nonetheless, if we take 2650 gold, and divide that by 67, let's say the gold to silver ratio gets to 67, which I think, I don't know how you feel, but to me, that still seems pretty darn high. I'm not going to trade 3 tubes of these plus another 7 silver eagles for 1 ounce of gold. Nonetheless, to each their own. But if we get back to a 67 gold to silver ratio, there you have it, guys, $40 silver. So, we're in this situation right now. We are in a battle. Okay, let's talk about the reasons why the gold and silver price both have been in a little bit of a downturn lately. The DXY index has been up almost 7 days in a row now. Let's go out and take a look, get an update on the DXY, right? The prettiest horse in the glue factory. Look, it's up again today. All right, let me make sure this is updated. And yeah, look at that. Oh my gosh. I mean, it's crazy. It's back to 107. This is nuts. Okay, look at 5 days, the last 5 days on the DXY index, straight up. Look at the last 1 month. Okay, basically up. Let's go back 6 months, though, because this is where, again, it gets so interesting. The DXY index was at 100 right around when the Fed first, we're going to talk about the Fed rate cuts. Don't worry, I forgot. And we got the big Robert Kiyosaki warning telling you to tell your parents, or maybe tell yourself, if you're a parent, that it's time to buy gold and silver. But nonetheless, I mean, this is where the dollar index was when the Fed started cutting rates. And it's just as crazy in the bond market. Let's go out and look at the bond market real quickly. Here's the silver price. We're still up 2 cents. But with that dollar going up like that DXY scam index, it is going to create more and more of a temporary headwind for the gold and silver prices. Let's go look at the bond yields. All of this affects the silver and gold price. Here we are. The 10-year bond's actually down. But again, this has been on an absolute tear. This makes no sense in light of the fact that the Fed is supposedly going to be cutting rates here in 3 short days? We'll go check on that as well. Okay, so we're at 4.4% on the 10-year bond yield. And let's just look at 6 months worth of that activity. Again, there we are, right? I mean, it's just crazy, guys. We were at 3.5 when the Fed started cutting rates. Now we're almost at 4.5. That's when the Fed, it's game over for the Fed. How can it not be game over? If the Fed lowered rates by 0.75 of a point during this time period, the Fed's lowering rates, but the market is pushing rates up. Doesn't that give us pure, undeniable evidence that the Fed is losing control of what's happening? Right? The silver and gold price are going to do very, very well. Hey, thank you, Jake from Jake's Custom Parts, for being here, and Annie Oakley, the one and only. Guys, please type, we haven't done this forever, and I apologize, 888-48 to say thank you for the moderators, because those that moderate are great. They make this channel absolutely possible. So here's what's going to happen this week. One more quick field trip, and then we're going to talk face-to-face. You know what? Let's talk face-to-face now. We're going to hear from the Fed on Wednesday. Okay, they're going to cut rates. It's like a 98% chance. We will go check on that in just 1 minute. The market has already priced this in. I hate to be the bearer of bad news, right? But the market, the gold and silver price, have already priced in the rate cuts. Now, what we need to pay attention to is what they say, because everyone is going to be listening very closely for some big indications. Everyone's going to be on pins and needles to see what kind of hints the Fed can give us about what's going to happen in 2025. We've got Goldman Sachs here. Let's look at this. Let's look what Goldman Sachs has said. This just broke over the weekend. as far as I know. This was on X from Zero Hedge. Goldman Sachs now is saying that there will not be a rate cut in January. They remove a January rate cut. And they said, quote, "We expect the main message of the December meeting, which will be here in 3 days, to be that the FOMC anticipates that it will likely show the pace of rate cuts going forward, the pace of rate cuts going forward, and we have revised our forecast for 2025 to eliminate a cut in January." So this is what everyone's going to be on pins and needles about. What's the Fed? What's the dot plot? All this crazy stuff, okay? But I got news for you. Here's the bottom line, right? The Fed has lost control. We can see that demonstrated to us in the 10-year bond yield. I mean, the Fed cut rates, right? The Fed lowered the interest rate. Their monetary policy has been lowering rates. The market, right? The biggest market in the world, the bond market. Do you realize that? Everybody talks about the stock market. The bond market is multiples times bigger. The bond market has raised rates by like 1% during that period. Here's the bottom line. I'm going to make this as simple as I can for you. The Fed doesn't really matter anymore. Okay, well, they do, but they don't matter as much as they used to. We still love you, Jerome Powell. We used to call him Gomer Pyle, but somebody said that was an insult to Gomer Pyle, the honest United States Marine. Nonetheless, the Fed doesn't matter. Here's why. Let's just say it has turned, everything is relative now. Okay, here's an example, simple example. If the Fed has interest rates at 10%, let's say they raised interest rates all the way to 10%, but inflation is 15%, okay? That's a very conducive environment for the silver price and the gold price. Doesn't matter. You say, oh, rates are 10%. The Fed raised rates to 10%. I'm just giving an extreme example to keep this simple. But if inflation is higher than that, like we said, 15%, that is still a very conducive environment for the gold and silver price. So you can also look at it on the other end of the spectrum. Let's say the Fed lowers rates down to 2% again, okay? If the Fed lowered rates to 2%, that would be bad for gold and silver. Not if the inflation rate was actually lower, at like 1% or 0%. God forbid, the Fed not be stealing our money from us. But does that make sense? Because what matters is the relationship, okay? The relative relationship between where the inflation rate is and where the interest rates are. So interest rates could be an even more extreme example at, let's say, 20%. Okay. But if inflation is running at 50%, right? Hyperinflation, which has happened in the world many, many, many times. Okay. Obviously, gold and silver are doing great, right? Hyperinflation, right? The only thing's going to save you are gold and silver. If the Fed put interest rates at 30%, but we had 80% inflation, I'm not saying that's going to happen. I'm just using that as an example. In that hyperinflationary environment with all that would be considered extremely high interest rates, the value of silver and gold would still be skyrocketing higher. So what does that mean for today and for tomorrow? And most importantly, for Wednesday? That is that if the Fed comes out with a little more hawkish type tone, like, oh, we may not be lowering rates as often and blah, blah, there's going to be a big market reaction. Oh, the sky's falling and, the market's whatever. What we need to remember is one critical point, okay? And that is that if you have a calculator and you have a brain, which we do, and you look at the U.S. debt clock, which don't worry, we will, we know that there's no mathematical possibility because mathematics show no forgiveness on the altar of truth that we are going to have much higher inflation as we head into the coming year and years. All right. That's a mathematical fact. The value of the dollar will be going down. And as that occurs, as that inflation number goes higher and higher and higher, it's that relative relationship between inflation and interest rates, right? And it comes back to negative real interest rates, right? When you take the interest rate level and subtract the inflation rate. If it's higher, if the inflation rate is higher, you get a negative number, a negative result, negative real interest rates, which will drive the value of, I hope I didn't spin your head, right? I know it can be a little head spinning. The bottom, here it is real simple. Don't worry about the Fed, because inflation is going to ruin their party, high inflation. And that will be very, very conducive to the silver price and the gold price. It's all smoke and mirrors. It's like if you ever bought a car. If you ever bought a car and you go to the car dealership and you talk to the finance guy, hey, I have a degree in accounting. I worked for a Big Four accounting firm. I know numbers. I can read financial. Those guys can spin your head around. Those car dealership guys. That's all they do all day. It's their specialty. And that's almost, I hate to compare the Federal Reserve to a car dealership, but I will. And Jerome is like the general manager. He's got his other salesmen below him out there, right? The local Fed governors. That's what's going on. All of this is in an environment. Think about this. And we're going to talk about Robert Kiyosaki issuing a big warning, red flags, right? Red sirens, and recommending to maybe your parents aren't alive, okay? But to you, if you're a parent, or just in general, older people, baby boomers, okay? SOL, you know what that stands for. Scary, scary prediction from Robert Kiyosaki, but let's talk, excuse me. Let's have a sip of coffee. I'll be right back. Yeah, Robert Kiyosaki gives a big warning to baby boomers. But let's set the stage here, okay? The NASDAQ stock market is at all-time highs. Bitcoin, do you know Bitcoin? I didn't look this morning. I'm amazed, okay? Was $105,000, whatever, okay? But at the same time, the Dow Jones Industrial Average had like a 7-day losing streak. Did you know that? The Dow? Remember, it used to be like what everybody talked about, the Dow Jones Industrial Average, 7-day losing streak, the longest losing streak since C19 occurred. Okay, right? So that's kind of where we are right now. And I got a question for you. Now, we're going to go look at this CNBC article, and then I have a very important question for you, basement dwellers. Okay, there's President-elect Donald Trump. All right. And it says right below it, the majority of Americans are ready to support Trump in large parts of his agenda, says a CNBC survey. Okay, that's point number one I want you to think about. Point number two is, where did it go? Oh, well, okay. The other thing, other surveys now are showing, hold on, let's come back and look face to face. Other surveys now are showing that Americans suddenly are optimistic about the economy, that everything's going to be great. Everything is awesome. Okay. Right. And everybody's is living in this new like era suddenly of optimism, which is great. Okay. That, you know what? That's great. But I want to point one thing out about that. Okay, and this has nothing to do with my with politics at all. Think about this. Over the last year, Americans were more pessimistic over the last 2 years, pessimistic about the economy really than any other time in history. Right? We were setting new records for how negative we were when we thought about the economy, our personal finances, everything else, right? That was the last 2 years. And apparently that was proven all wrong, because over the last 2 years, the economy did great, according to our handlers. I'm a good pet, right? You're a good pet, right? Our handlers are telling us, don't worry, I'm here. Wait a minute, where is she? Here she is. We only have so much more time with her. The U.S. economy is strong. Remember, she couldn't understand what was wrong with you Americans. The economy's awesome, right? Everything is cool. That's Janet Yellen, our outgoing Treasury Secretary. We're going to miss her. And she is sorry. Okay. On a side note, she is sorry that she racked up $17 trillion in debt, which your children and grandchildren will be paying for generations to come. She is very sorry. And we haven't decided whether we're going to accept her apology yet or not. I digress. The point here, and this is a very scary point, and then we're going to talk about a very scary warning from our friend Robert Kiyosaki. Okay. The point is this: everybody thought everything was so horrible over the last 2 years, but as our handlers have told us, everything was awesome. Everything was great. The economy's great, right? Now, so everybody was wrong. The general public was wrong. Now the general public has this newfound optimism heading into 2025, and we got big trouble. I believe, I could be wrong, big trouble coming down the pike in 2025. Is the general public usually wrong? Yes, we are. We're wrong. Okay. Just generally think about that. Think about that. The general public is generally wrong about things. So I think that could be an indicator that we've got trouble coming. And what other big scary indicators do we have besides Robert Kiyosaki telling us that the sky is falling? Here, let's look at this one. Here's some good news. Falling off a cliff. This is from Zero Hedge. Not just falling, but falling off a cliff. Falling's bad enough, especially as you get to be a little bit older. I'm 55. Now, when I fall, it hurts. This chart proves that we are in a major economic downturn right now. This chart, let me say that a bit differently. This chart proves that we are in a major economic downturn right now. Okay. Oh, great. The number of job openings in the United States has been falling off a cliff. And that is a major red flag. Do you see that guy's feet coming? Oh boy. Hopefully there's a airbag underneath him. Nonetheless, the last 4 years have been an economic nightmare for most Americans. Well, no, right? And that is one of the primary reasons why Donald Trump won the election. But as we approach 2025, things are starting to get frighteningly bad. When the number of job openings in the United States drops by 2 million or more, that normally signals that we are either in a recession or that one is about to happen. Well, as you can see from this chart that was posted by Bravos Research on Twitter, it's called X now. Come on. We are witnessing a collapse in job openings that is absolutely unprecedented. I need to use that word more often. Unprecedented. Not just absolutely bad, not just absolutely scary. Absolutely unprecedented. Okay. And here it is. This breaking job openings falling off a cliff. This typically only happens when we're heading into a recession. And let me see if I can get that on the full screen. There you go. You can see that a little better from Bravos Research. Look at this, guys. Do you see? Hold on. Make sure we got you on the right screen. We do. Okay. Do you see this? You should see a little hourglass. Those are job openings. We had like 12 million. It has collapsed down to 7 million. It is collapsing. There's no other way to say it. The other thing that's interesting about these jobs data is, and I used to work in the, I don't know what you call it, employment field. I don't know whatever, is that now with online job postings, a lot of the jobs are posted several times. There's a lot of companies that just post jobs on these job boards that aren't real jobs, but they're just collecting resumes. So that number is likely very, very much exaggerated. We are not a good sign for what is happening. Now, let's go. Then we're gonna talk Robert Kiyosaki, right? Doom and gloom. Are you a baby boomer? I'm not. I'm a Generation X, I think. I was born in 1970, but he's got big warnings. And it also, he has something interesting to say about silver and gold and Bitcoin. Okay, let's go, though. There's more bad news. There's always more bad news here in the basement. Wrong one. Where is it? Here it is. This was out this morning. Okay, from our friend Niels Christensen over at Kitco. Gold prices holding fast as the New York Fed's Empire Survey drops to 0.2 in December. This is the New York Federal Reserve manufacturing survey for New York State. Okay. Gold market holding on, but is not seeing any significant bullish momentum after the New York Federal Reserve reported weaker than expected activity in the region's manufacturing. Look at how much this dropped, though, guys. This is scary. On Monday, the regional central bank said its empire. This is the New York Federal Reserve. This is like the flagship Federal Reserve Bank. Okay, and they said that the Empire State Manufacturing Survey dropped down to not 20 but 0.2, down sharply from November's reading of 31.2. Now, we don't claim to be mathematical or calculus geniuses, but when something goes from 31.2 all the way down to 2, and it's a survey, 31.2 minus 0.2, I think it dropped by 31. According to the consensus estimates, economists were looking for a slightly better reading of 6.4. So do you see what we are seeing in the economy right now? Jobs numbers, job openings, cratering, unprecedented. I challenge you, use that word one more time today. Unprecedented. 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 Soon, Joe Biden will be unprecedented. Not a political show. Nonetheless, unprecedented jobs numbers, bad. On top of that, manufacturing numbers, bad. This is why Robert Kiyosaki is giving this big warning. Okay, on top of that, let's just go check here real quick because we got to see what's going on. How's the United States government doing? I'm just a good old boy from St. Louis, Missouri, where Missouri, we have 2 Federal Reserve banks. Well, the national debt is still going up. Good job, Joe. Good job, Janet. You guys did an awesome job. The economy's awesome. Okay. Let's go check on to make sure they haven't stopped printing money, and they did not stop printing money. Ooh, we're almost to 1,120. We got one more dollar to go. Come on, Fed, you can do it. Print a few extra bucks. Dollar to silver ratio, which measures the number of dollars being created, right? Printed, however you want to say it, added to the M2 money supply for each 1 ounce of silver that's being mined by hardworking miners throughout the world. For each 1 ounce of silver, your government is now creating 1,100, and we're going to round up $20. This is going up. If you notice this, the paper to silver ratio, 412. That had been stuck around 410 for a long time. That's just a crazy high number, which tells us just one thing, and that is that the manipulators of the gold and silver price at the COMEX and the LBMA, right? They trade 400 paper unicorn fart dust. Unicorn. You want to see something funny? My first cousin, once removed, sent me something. Let's have some fun. We'll go on a field trip, and then we're going to talk about the Kiyosaki. See if I can find this. Future live stream. And here it is, unicorn fart. Are you guys on the right screen? Hold on here. See if I got you on the right screen, which I do. Okay, this is fun. For those of you who've been around a long time, we like to refer to the U.S. dollar as unicorn fart dust. And my first cousin, once removed, sent me this. Watch this video. There you go. Thank you, Bob. My buddy. Smart. He also, well, anyway, he's a great guy, very smart guy, knows about gold and silver. Watch one more time. Watch the unicorn, and poof, there goes. That's Jerome Powell in blue. One more time, we'll watch this. There's the unicorn, poof. Yeah, so that's what Jerome Powell is doing. Oh boy, where was I? Okay. Yeah, I'm going to tell you what's his name said, Kiyosaki, but let's just, before we forget, because this is the biggest story of the week, the biggest story in the history of the financial universe. What will the Fed do? Let's go look at the countdown here. Is that up to speed? Yes, it is. Okay. In 2 days, 2 hours, 3 hours, 37 minutes, and 37 seconds, we are going to hear from the Fed, and there is now They're saying 96% chance we'll get a rate cut. Let's go look. Hold on here. Let's just, for kicks and giggles, basement dwellers. That's not working. Here we go. Let's go out to December of next year and see where they're. Wow. What? Is that December of next year? No, that's 2024. December 10th. I want to see 2025. Here we go. Okay, this is a year from now where they're saying, so rates right now are at 4.5. We'll look at the lower number right here. Or let me here. This is how you guys read this, okay? There's rates right now, 4.5, 450 basis points. They are saying that there's a 20% chance that rates will be a full percentage point lower, a 33% chance that they will be 3/4 of a point lower. Again, this is 1 year from basically right now, and a 27% chance that they'll only be, what would that be? A half point lower, 50 basis points, and only a 10% chance that they will be just a quarter lower. They should be at this level next by the end of this week. So that's what's going on there. Okay, hold on. Uh-oh, we're having trouble. Okay, I'm getting a trouble message, but I think you guys are fine. Oh, shoot. What did I do? Okay, I think we're still live. Yes? Okay, I got a trouble message. I got a trouble message from StreamYard. Can you guys see me and hear me? Somebody please give me a 5x5 because we may be dead. Are we dead? I hope not. I didn't even give you the Ron, you've smacked that like button. Ron. Yeah, okay. Thank you, Sarge. Thank you, Jake. Thank you, guys. Sorry, I got a big red trouble message. Okay. Let's talk about Robert Kiyosaki. Big message. Big scary. What's he saying? Where'd it go? Now everything's out of line here. Hold on. Here it is. Robert Kiyosaki. Boomers. Robert Kiyosaki can be a bit controversial, but Robert Kiyosaki is also generally very respected, and he's been very successful. And Robert Kiyosaki says that boomers are SOL, which, as you know, means poop out of luck, okay? When the stock market bursts, boomers will be the biggest losers. Boomers have been lucky. I would agree with that. I tell my mom and dad that all the time. I'm like, and my mom and dad are wonderful people, but anybody who was born like right after World War II, like you lived in the golden age, right? In the 1970s, boomers caused real estate market to boom. In the 1970s, boomers 401ks caused the stock market to boom. In the 2020s, boomers' old age will cause real estate and stock and bond markets to bust. He admits he's a boomer born in 1947, and I'm not counting on my home to be an asset or a 401k or an IRA to keep me alive in retirement. He said, if I were a child of a boomer, and that would actually be me, I would nudge my parents to sell their home, their stocks and bonds now, while prices are high, before the crash that is coming, and buy gold, silver, and Bitcoin before your boomer mom and dad move in with you. Hey, I'm fine with that, mom and dad. They've been good to me. Or expect you to pay for their rising health care or funeral costs. The biggest crash in history is coming. Please be proactive and get rich before the boomers go bust. So he is predicting a dire situation here as we head into the coming year, 2 years, 3 years, the biggest crash in history in the stock market, in the real estate market, but even more importantly, right? Even more importantly, what example does he give us? What reason does he give us, right? Because we know these boomers are getting older, but even more importantly, what example does he give us as to what to do? Maybe liquidate, considering this is Robert Kiyosaki. I'm not giving financial advice, but liquidating some of those assets and buying silver and gold. How do you feel about your home value right now? You know, I've shared with you. Okay. I paid about 200K, I think 240K for this house. And supposedly it's worth at least 400, probably 500-ish right now. That range doesn't seem real. I don't think it's worth that much. Oh, this is crazy. Okay. Think of this is crazy. Daniela DiMartino Booth was on. She was worked with the Fed. I don't think she wasn't a Fed governor, but she's the bomb. Okay, this is a crazy statistic. I'm going to ask you a question. Okay, and I'm gonna watch in the comments and see who gets this one right. Okay, this is whatever you're thinking is wrong. What is the average age of a home buyer right now in the United States? Type away. Whoever wins it gets a big virtual kiss from me. Okay, come on, type away, because it is absolutely shocking what the number is. Close, Platchkey, you're close. No, Jake. Oh, Dave Musso. Boom, 56. Dave must have watched the same video that I did. 56 years old. Annie Oakley, 49. That doesn't make sense. Our economy is sick. We need young people to be buying houses in the United States. I'm 54. The average homeowner, right? Young people can't afford to buy a house in this country. It points to some very, very sick underlying conditions in our country. People are into debt up to their nose. Are you in debt? I hope not, right? 112. Yes, Ron. Yeah, Dave, you cheated. No, good for you, Dave. You get a virtual kiss. Good thing I didn't promise anything more. 56 years old. That's just, I was shocked when I heard that. It doesn't make any sense. The other thing, have you heard this? The other thing that everybody's doing now, excuse me, I need some coffee. I might pass right here on the screen. Hold on one second. Maybe you couldn't see my coffee mug because it's camouflage. The other thing everybody's doing, because people have racked their credit cards up, right? We have record credit card level because the economy's so great. People are now doing the buy now, pay later thing. And that's hidden in all the economic numbers. They did a survey and people are saying, this massive number of people are well, I don't have any money left on my credit card. So I'm going to buy Christmas gifts for everybody, but I'm going to use buy now, pay later. Okay. It is not good. Right. And she also, this Danielle DiMartino Booth, who I really like, she's really awesome. She threw out some other stats that the U.S., we are a consumer-based economy. Okay. The United States is a consumer-based economy. That's what we got going for us. We buy a lot of stuff, just go to a Goodwill store sometime and look at all the used stuff or go to eBay. Anyway, that the U.S. consumer is a big part of our economy, but 15 or 17%, 18% of the world economy. It's not good, guys. It's not good. Jeffrey Christensen, whatever, the guy from the CPM group, I think he's an ex-Goldman Sachs, says something very interesting to say about gold and silver. We listened to him last night. What did he tell us? He told us, right? He has a good positive outlook for gold and silver into 2025, but he called 2025 the year of consequences, right? The 2025 will be the year where the hens come home to roost. That's me saying that, not him. So we'll see how that all plays out. Thank you guys for being here. Have a great day. Okay. Thank you to First Mining Gold and Fortuna Mining for sponsoring the basement, both stocks that I own, but I'm not a financial advisor. But you can learn more about each of those companies that I really like. Links will be in the description of this video. Thanks to Jake from Jake's Custom Parts. Thank you to Annie Oakley. Thank you to you for being here. You are the most important part. Have a great day, and I'll see you soon. Bye-bye.